The coronavirus continues to rattle the stock market. So on this Finance Friday, certified financial planner and president of Shakiba Capital, Trevor Shakiba is sharing tips on how to take advantage of the market volatility. Trevor, welcome to the show. It is great to see you. Okay, so this is great news for a lot of people when you're actually saying you can make more money in the long term if you just sit tight and actually get strategic during this very strange time.
Yeah, and look, we've talked the last few weeks about how to play defense. And interestingly, I've gotten a lot of questions about how do I take advantage of this from an investment standpoint. So, you know, the first thing I want to say, or the first point I want to make is that this assumes, these next points assume that you've figured out the defensive position. You've solidified your financial situation. So you have a good cash reserve, 6 months or more. You've got good cash flow. And then one other thing that we haven't talked about, I do want to recommend to the viewers, is look at refinancing now. That's one way that you can change and maybe go on offense a little bit, is if you have a 4.5% or 5% loan on your mortgage, now's the time to look at refinancing, maybe even do that for cars as well. Don't pay as much interest. So that's my first point, is make sure you've solidified your financial situation. And then, yeah, let's talk about how we can go on offense and really put this in a good light to hopefully make some more money.
And I know for a lot of people, Trevor, it might make them nervous, the idea that they should just keep going and keep investing. Is that the strategy right now, that if you have a 401k, you should still be putting that same percentage of money in to the market? I mean, that makes a lot of people nervous considering what they've seen over the past month.
Yeah, and I absolutely understand that. But that's my first tip, is you don't have to do anything besides just continue to do what you've already been doing. So I wouldn't reduce what you're putting into your 401k if you have stable income. In fact, I would keep it where it's at or increase it, because the market's on sale. That's the way to look at it. And what I'm talking about here, Derek, we've talked about it a lot, many times before, is dollar cost averaging. So when the market's down, you're still saving in that same amount. You're buying more shares. And then as the market recovers, which we know eventually it will, those shares will increase in value. And that's how you spread your risk out. So that's my first tip, is you don't need to actually change anything. Just keep doing what you're doing.
Okay, that's an interesting way to look at it. The market's on sale. You use the same amount of money to buy more shares. All right, let's chat about a more aggressive allocation. So maybe now is a good time to rebalance the way your funds are set up that you're investing in.
Yeah, so this is another real easy tip that you can look at perhaps with your advisor, is just reallocate, because you want to buy low and sell high. That's one of the fundamental things you hear all the time. Well, if you're in a 50-50 allocation, equities to bonds and cash, this might be the time to go 70-30 equities to bonds. So essentially you would be buying the equities, which have been hit hard in your mutual funds and index funds, at a lower value, thereby taking advantage of this correction and this volatility.
Discretionary cash. One of your tips is to put that discretionary cash to work. And explain this, because this is not the emergency fund. Everyone should have at least 6 months in reserves or more, as you said. But if there's extra cash, Trevor, you're saying that you can take that money and put that to work even harder right now?
Yeah, exactly. And that's a good point that you made. Like, we're not talking about your emergency fund, right? So this is money that you have above and beyond that. And I know not everyone has that, but if you do, this might be the opportunity to, again, dollar cost average and invest into the market, just in an index fund, let's say. But remember, it was 7-8 weeks ago, the Dow was at 29,500. I mean, we were pushing 30,000 on the Dow. We went all the way down to 18 or 19,000. We've recovered some, but we're still 20 or 25% below where we were. And so again, going back to that description of you're investing in these fantastic companies that are on sale at a great value.
We're tight on time, but let's chat about oil. This is something that a lot of folks in Houston have their eyes on. What do we need to keep in mind if we are considering investing in oil, or if we currently have investments in oil?
Well, yeah, if you've paid attention to the news at all recently, you've seen some crazy things where The May contract actually went negative. And so the main point I want to make here is this is not the time to speculate and buy futures or do crazy things. If you want to try and take advantage of where oil is, invest in great companies, good balance sheets, companies that have great cash that are going to be here. Their stock price may have been hit pretty hard, but you know when demand returns that these companies will come back as well. I think it's a great opportunity, but I just want to make the point, good investing, investing for your future is not gambling. So make sure that you stay the course and invest in good companies.
Well, and Trevor, ever since the beginning of your time here with us at Houston Life, you have told us to save, save, save for a rainy day, have that emergency fund in place. And I think the past month is just proof that we all need to have a little bit of a cushion. So thank you for your sound advice. Happy 10th anniversary, by the way.
Yeah, thank you very much. You can see I married way out of my league.
Well, please send Christina our best, Trevor. It's great to see you, and I hope you have a nice celebration at home tonight. And as always, if you would like to connect with Trevor and the Shakiba Group, shakibacapital.com. Again, happy 10-year anniversary. I'm sure a celebration is in order.